My name's John Ciganek. We've got the Steelpoortdrift Vanadium Project in the Bushveld region in northern South Africa. It's one of the world's largest and highest grade vanadium deposits. DFS, we completed that in October last year for the first 25 years of our deposit. Gives us about US $0.9 billion NPV for our 74% share. Last week we announced that that's going to be increasing to 86% share in the next month or two, which will take us over $1 billion NPV. It's outcropping, easy to access, open cut mining, low strip ratio, low operating costs. We're using conventional crushing and salt roast leach processing methods, which is an existing method that's used in the Bushveld region. We'll be producing vanadium pentoxide of about 10.7%, 10.7 thousand tonnes per annum, and doubling that in year 4 once we're in production. We've got our mining licenses been granted. We're in the Bushveld, which is established mining and smelting operation jurisdiction. There's about 30 to 35 mining and smelting operations in the area. And because of that, it's a major industrial hub. We've got mining, smelting, power, water, access to individuals, access to vanadium expertise, which is key here. We've got an experienced team who are currently in the recruitment process for developing our construction team. Our market cap's low, it's $40 million, and the focus in the next few months is really bridging that gap, implementing our financing plan. We're in detailed discussions with debt financiers at the moment. We've got several term sheets across a range of different debt funding options. We'll be announcing offtake in the next few months and securing strategic investors as well. Vanadium, there's two main areas, and steel and alloys represents about 90% of the production of vanadium, and that's pretty much how our phase 1 project would be based on. And in terms of getting this banked, it's around steel producers and getting that up to speed. We're getting good traction with steel producers with the vanadium pentoxide, so that's our phase 1 project. Vanadium redox flow battery, for me, this is one of the exciting areas and one of the reasons why I've taken on the role. VRFBs, a good example is the 100 megawatt VRFB battery in Dalian in China. They commissioned and operating that since October last year. They're in the process of doubling capacity up to 200 megawatts. The key there is it's grid scale. It's a potential displacement of coal-fired and gas-fired power stations with using renewable energy. And it's got the capability to do that, being a vanadium redox flow battery. The key point in this diagram is the circle in the middle. 90% represents steel market. VRFB is about currently 6 to 7%, and the aerospace for the pentoxide 2 to 3%. The key here is the equity upside from my perspective in terms of once we're in production. 15 to 20% of the market will constitute production for vanadium for VRFBs. Some of the key metrics from our DFS in October last year, I won't go through each of them other than that they are very strong. We've got a low capex of $211 US, and that's just to produce a vanadium pentoxide. Our peers in the Bushveld produce vanadium trioxide, ilmenite, ferrovanadium, and a suite of other products. And that's basically the building block of all vanadium type deposits. The reason why we've built just that facility is because our market cap's so low. So once we're in production, we'll expand. We're in the lowest quartile with $3.24. It's being well received from the banks because of that. Our DFS was based off $9.50 a pound. It was recently about $11. It's currently trading at about $9.50, $9. For me, this is a key slide technically in terms of getting it banked. We're in the Bushveld. It's in the northern part of South Africa. It's been a major mining and smelting hub for decades. It will continue to be that going forward. Platinum, chrome, and vanadium, importantly from my perspective. It's been a major production hub for vanadium historically, and because we're in the Bushveld, we've got access to infrastructure. In terms of the project itself, that red box where it's got the mine site, that's basically our DFS, our 25 years. The blue area around that represents the rest of our resource. It's about a 180 year mine life at least at the moment. We'll be looking to haul the concentrate across to the SRL plant, the salt roast leach site. And we're looking to put an overland rope conveyor. Basically, it's a ski lift with a hopper, and that'll remove the need to transport concentrate through the community and out through the road, and it'll be electrified. And what we're doing on both sites is we're implementing solar and vanadium redox flow battery on the concentrate side, just big enough as a reserve for Eskom. There are issues with Eskom, and that's the reason why we're implementing that. And our partner on that, we've got the industrial park. They're building a 35 megawatt solar facility earmarked for us. We only need 13 megawatt of that, so it's plenty of excess capacity. And more importantly, it's a major mitigant for Eskom power. I won't spend too much time on this, other than it's big, it's flat, it's outcropping, and we're only mining for the DFS about 12% of that. So we've got lots of upside and optionality. Won't go into detail here, other than it's used in the bushfield. It's been used in the bushfield. The flow sheet here on the concentrator and the SRL plant, techniques that are proven. In terms of getting banks across the line, I think this is bankable technically. In terms of, we're running several processes. At the moment, we're in discussions with debt financiers. We've got an advisor out of London. We've got several term sheets covering a range of different types of debt financing, from export credit agency, conventional project financings, PE funds to Nordic bonds. So we are exploring all the options. What's one of the requirements here is long-term offtake, and we're talking to a series of strategic investors in offtake. We've been running that process for a few months since my appointment in January this year. One of the first cabs off the rank is Matrix Resources. They're looking to secure 20%. We've got an MOU with them, and also another 20% as a sales agency. They've invested 10% of the company at a 40% premium. It's still only an MOU, but they're keen to convert that into an offtake. And there'll be more of these types of announcements coming through in the next few months. For me, this is critical for getting the debt, and I believe that we'll get there. Timeline, we completed the DFS prior in October last year. We'll be well down the path on approvals with water environmental authorisations, probably by about Q3. The other work streams are, there's a lot of technical work there. We are reevaluating some parts of the project. Technically, we've recruited a general manager out of the Bushfield Minerals vanadium operation, so we try to incorporate that. We're planning for FID by the end of the year. That is a stretch target. There is still a lot of technical work that we need to do. In parallel, we're running the offtake and the debt processes that I highlighted earlier. If we do get there by the end of the year, from a technical point of view, we'll have debt financing options available at that time. If it takes us longer, then we'll gravitate from the more expensive debt into ECA or project financing debt. And in terms of wrapping up, there's some of the key catalysts for this project is the offtake. That's the key for unlocking value. It also gives third-party validation. That's just due diligence underway. Also on the third-party validation is the technical DD that'll be coming on the debt financing. Term sheets are indicating about 65% gearing. Theoretically, the banks are saying we can give you more debt. I'm an ex-banker. I'm not going to let this go over 65%. And then that'll give us our phase one. So that'll be basically off the back of steel manufacturing and offtake for that purpose. Once we've got that built, we'll then be ready. And once the vanadium redox flow battery, I think it's a wave that's coming. I think it will be a game changer globally in terms of displacing coal-fired power stations and gas-fired power stations. So from my perspective, that's the key, getting to stage 2. We've got a lot of optionality. Our resource is massive, so we're looking at a range of different feasibility options around that, selling our concentrate, selling ferrovanadium. Do we just make this bigger? Do we go, currently our base case is 1.5 million tonnes per annum. We can go to 3.5, we can go to 5 and 10 million tonnes per annum. Or should we go add more products into our suite of production? We can do that, which is what, and these are the other metals that the Bushfield operator is currently doing. And then we're also having discussions with potential battery manufacturers, solar manufacturers, and potentially exploring building an electrolyte facility right next door in Steelport, or a solar facility. And in South Africa, we're getting a lot of inbound interest from South African companies, South African solar generators looking for VRFB. But my job is to get phase 1 built first. That's it, basically. Yeah. And thanks for sitting out for the last meeting. Yeah.
Sean, thank you, Ron. We've spoken in the past, and I've looked at quite a few vanadium projects around the world, and I look at this, it's got great. It's got fantastic access in terms of the ore body and mineability, using conventional type of recovery techniques to get your product, at least one of the options that you've got for the product and further downstream processing as at stage 2. But when you come to look at talking to the financiers, what's the element that's maybe they're looking for, the hurdle for you to jump, for them to go, yep, we're signed up?
Offtake.
It's all about
technically, it's bankable, it's proven. Commercially, I think it's in a major jurisdiction, so we've got a lot of mitigants associated with that, having infrastructure. Power is one of the things that resonates. That's an issue in South Africa. That's a everyone on the planet knows that there's issues with power, and that's one of the reasons why we're building our own solar facility and VRFB battery, and we're partnering up with another company to do a solar facility. So with that and feeding that information to the banks, that's resonating with them, but it's the offtake, just making sure that the volume's protected. Vanadium price fluctuates, and so and on that point, what we've done with the MOU that we just announced is a 10-year offtake with a floor price mechanism, and we'll be doing with basically this term sheet that we've negotiated with it's a nickel producer, by the way, is a floor price mechanism. So and we're doing that with each of the groups. There's another group out of Europe, which is a steel producer, trader, and also out of North America and Europe. So I'm looking to bring in about 3 off-takers, and that gives the equity markets third-party validation, gives the equity market some comfort that we've got some support in South Africa. And the other one is out of South Africa itself. You know, some of the debt financiers there are keen for us to develop the ability to produce vanadium pentoxide in country, and to address the power issue.
It does seem like a very interesting project. The Chinese invested at 11 cents. I think one of your contractors invested at 10.5 cents, and your price is now 8 cents, or a bit more than 8. Is that because you need to formalise these offtakes, the political instability in South Africa, and then the power issues that you talk about? How much is the political instability in South Africa?
I think outside of Africa, particularly US and probably particularly out of Australia and London in particular, there's quite a negative perception around South Africa. So that's probably one of the bridges that investors need to get their head around in terms of political risk in South Africa. So that's probably the main roadblock with our market cap at the moment. I think as we start delivering into our offtake, and debt financing, I think some of that skepticism about building a project in South Africa is going to go away. The fact that we got Rabex in there for 60% premium, they wanted to have a seat at the table with the offtake, so that's the key there. Matrix, 40% premium as well with the investment was around getting the offtake. They want the offtake. The other groups, we're having the same discussions there. It's really around, we want the product, and I'm saying you're not getting the product unless you give us a premium to where we are. And we don't want to dilute at these levels, so we've got lots of avenues with off-takers and strategic investors that we're running in parallel at the moment. So that's the reason why we're getting premiums with those types of strategics.
And with your financing, are they going to come from South African banks? Because
we've cast the net out to about 25 banks, globally. Anybody that I've ever dealt with, so there are South African banks. There's I won't names, but there's a few there that are running the ruler across us. We've got term sheets from one particular bank that's going to put in debt and equity. Majority of the funding that we're getting interest out of is out of Europe, North America, and then the PE funds, they're global. So there's groups in South Africa, North America, Europe, and also Nordic bonds. We're talking to Nordic bond, potential Nordic bond investors there as well. So just to finish that, we have got a range of funding options. It's not like we've got one or none. We've got several. Do we go more expensive and get this done quickly? My point earlier that if we're ready for FID by the end of the year, we can go down the PE route or a Nordic bond route. If it's going to take longer, we'll go down and get a South African bank, project financing, ECA, Export Credit Agency funding, which is significantly cheaper, but will take longer and a lot more due diligence.
Thank you for the presentation. Good luck with the project.
Thank you.
I just was trying to broaden my understanding because from what I've seen, there's quite aggressive forecast growth rates for the batteries that are mentioned by the redox vanadium batteries, which is great news. But how does that compare with some larger scale batteries, say the sodium alumina or the existing lithium batteries? What are the advantages of, say, the redox flow batteries?
Some of the headline aspects with sodium, I think that's got a long way to go still. I think it's probably where vanadium redox flow battery was 10 to 20 years ago. On the lithium hydroxide, the headline number, it is cheaper in terms of operating costs, but the advantages here with VRFBs is that it can go for 20 years. At the end of 20 years, you take the electrolyte out of the battery and put into a new battery, and then you go for another 20 years. So that's not really coming out in the operating cost aspect. And I think some of those metrics will start to become more prominent with those facilities in China in particular that are at the grid scale capacity, where we'll start to see some more numbers around the operating costs, the capex costs, how do they compare to lithium hydroxide. It's also the safety aspect and some of the lithium hydroxide plants, the bigger ones, they can overheat. That's a common issue. We don't have that with VRFBs at all. So I think the proof's in the pudding in the next 12 to 24 months, once some of these larger scale facilities have been running for a period. In terms of banking that type of project, it's too early. I think banking this project around steel and alloy is the way to go here. And by the time we're in production, there'll be at least 2 or 3 years of data, that's new data around operating costs in particular, does this make sense or not? And then if it does, we're in the box seat.